This is the August 1 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Ellen Dearden. She's at AgReview in Morton, Illinois. Logan Kimmel joins us from Roach Ag Marketing out at Naperville, Illinois. And Dave Chatterton is here from Strategic Farm Marketing in Morton, Illinois. Commodity Week is a production of Illinois Public Media. It's public radio for the farming world. Online, on demand, anytime you'd like at willag.org. That's willag.org. Let's begin with a list of items that we should discuss for the day. Ellen Dearden, I'll start with you. What's on your mind?
I think that we need to be looking forward to the August 12th crop report and see how we feel that acreage changes might come about, and that will lead us into the question is how big is big on the corn and bean crops.
Logan Kimmel from Roach Ag Marketing. Anything else we should add?
I think on top of the August 12th report, that's going to be important to watch, but how can we navigate the next month and a half to 2 months in the grain markets for folks working still on old crop and new crop? What will move the markets going forward and the opportunities that might present themselves here in the short term.
And Dave Chatterton.
Yeah, Todd, I think I'd pick up on both of those comments and say, really, I think what we're pointing at is what's going to change this current trend. We've been in a very clear and a very strong downtrend here and posting new contract low after new contract low, it seems like, or feels like anyway, in corn and soybeans. And so the question becomes what's going to change that? And certainly the first thing we would look at would be the USDA report, both the acreage and the yield information that comes in next Friday. But I think the other question here is, we had a lot of talk today. We saw China finally come back by a few U.S. soybean cargoes, and that's the missing ingredient on the export side, is that they've been very slow to pick up any U.S. soybeans, particularly for new crop. And, I don't know if today's announcement is the start of anything, but certainly we need to start identifying what may change here going forward and change the trend that we have at hand here.
Ellen Dearden, let's pick up with you. And that USDA report, both the crop production report as well as the WASDE World Agricultural Supply and Demand estimates, are due out Monday the 12th. The crop report will incorporate, and WASDE by default, a change potentially in the acreage figures. USDA warning folks of that earlier, I think, in this week. Can you talk a little bit about what your expectations might be?
Well, first of all, USDA came out last September and said that they would start using FSA data to make adjustments in acreage, planted acreage, in the August reports on out. So I think we knew that this had a potential to come. My idea is that we probably had larger plantings than what the trade anticipated out of the last report, planted acres. But I think the harvested acres as a percentage of planted on the corn and beans both will be down, but it will be more easily seen in the corn number. So my expectation is that they're going to come out with, or USDA will come out with, pretty large numbers on this report, because they may even try to bump up the yield expectation on this report, which ordinarily they do not. But I wouldn't be surprised to see something higher on both as far as planted acres. So I think that might be a headline to avoid getting stuck in.
Yeah, this would be not, I think, maybe the expectation of most when they were, and I said warned, but just reminded folks that was coming up. I'm not sure that most would be thinking of it in that way. They probably would be thinking about the flooding in the northwestern part of the Corn Belt and that acreage might go down. But because it's based on the FSA numbers or planted acres, things that were already put on the ground, you could see an increase. That's what you're telling me. And you're in the same breath you're saying, but they probably will adjust or widen out the harvested acreage figure from that, and it would be more easily shown in the corn. Am I summarizing that correctly?
Yes,
okay.
I would say harvested acres may still come in at 83.4, or somewhere close to what they had a month ago, but I expect planted acres in the corn will be higher, yes.
So, Dave Chatterton, is this one of the changes you think that could make a difference in the future?
Well, it's certainly something we're going to have to watch, Todd. And I guess, from my own perspective, I've kind of given up trying to outguess the USDA and apply logic to what they do on a report-to-report basis. So the direction at the end, they usually get right, but there's a lot of static in the middle. And if we go back and look at what happened, on the June report, we still had over 16 million acres left to plant at that point. And I'm kind of going from memory here, but around 3.5 million in corn and around 16 million left in beans, 12 million left in beans. And so, the closest that I can come to that is 2022. And in 2022, we had almost 20 million still to plant when the June acreage numbers came out. That year, we had a harvested acreage reduction of a total of 2.6 million acres. So, the trade is expecting that. And if we don't get, I guess if the USDA doesn't produce that, I'm a little bit more in Ellen's camp. I think those numbers will be a little bit softer than maybe what the trade is expecting. I think the line going in is probably a million acres, maybe let's say, 1 to 1.5 million acre reduction in corn and probably 500,000 plus in beans. I would suspect those numbers get a little bit softer than what the trade is expecting, but I do expect that they go down, Todd. The issue, I think, to me, is more about yield and the trade action that we've seen here of late and the price action encompassed within that, pretty easily tells me that the trade as a whole is willing to bet the over in terms of yield. And when you look at the yield situation, when the USDA brought out their balance sheets for new crop at a 181 in corn and a 52 in beans, that was a record in corn by 3.6 bushels, I think, and it would match the previous record high that we had in the U.S. soybean yield. We started out with a discount, I think, in the trade to those numbers due to late planting and some just the struggles that we had in the spring. And as the growing season has gone on here, and things have improved, particularly here in, through the month of July and then what looks like into early August with the rainfall, we're now all of a sudden at, if not above those numbers. I think in trade circles, you're hearing whisper numbers in corn of 183, 184, 185. And beans at 53, 53 and a half, 54. I'm not sure the USDA, I'm not predicting that they go and print those numbers come next Friday, but that's the direction the trade is looking for. So the trade is looking for larger ending stocks and moving that direction. And that matches up with the trend that we've seen in price. I think that's one of those surprises or one of those things that we can look for that could trigger a change. Whether or not we get that, like I said, me and betting either for or against the USDA seems to be a losing proposition, but we'll have to take the numbers when they come.
And Logan Kimmel, when you consider both the acreage and yield, do you expect adjustments and are you in relative agreement with what you've heard so far?
Yeah, I'd have to agree with that thus far. I guess I look at it, we got to get to the report first, and that's still a handful of days away. Probably something that I would consider the traders are more eyeing is the yield, and probably pricing in a potential record national yield at this point. So to me, I don't want to try to outguess the acres on the planted side, but what is the trade assuming on the yield? And as we get more private estimates that have been coming out or will be coming out here in the coming days to weeks, it will be interesting to see. It certainly feels like that trend or the thought process on that is to the higher end on yield estimates.
On that note, Logan, did you see the StoneX numbers that we talked about on Tuesday during the closing market report?
Yes, for the August StoneX survey came out with a 182.3 on corn and a 52.6 on the soybeans.
Ellen Dearden, I'll come back to you now and ask you about yield. We did talk about acreage with you. Are you of a mind that these numbers will be very, very large?
On yield numbers, I think the trade has already plugged in a 183 bushel per acre yield at current prices, and I think we could probably be up there. I mean, we still have a lot of weather to go before harvest is underway, but I think we've got to be plugging in some bigger numbers even than USDA already was at a record yield number at 181. So we'll look for something bigger. But I think the bigger question may be, where does USDA plug in demand? Heck, they really raised feed use a month ago. Is that going to stand, or we just don't have the livestock numbers to really support that? I don't think. Where are we going to end up with demand?
On that idea, the July numbers for cattle, and Jason Franken at Western Illinois University, I think, showed year-over-year decreases in the total inventory of about 1.5%. Those inventory numbers don't come out from the United States Department of Agriculture anymore because they were part of the budget cuts. Where did the trade stand on that figure? Because they're probably forward figuring into it.
Well, yeah, I think most everybody has been plugging in somewhere between 1% and 2%. Lower total cattle inventory. So we got to feed a lot of chickens to be able to have corn feed use this high, and we certainly are flatlining on the hog numbers too. But I think the cattle numbers are, we've got a little bit of a hole without this cattle inventory report in July, but at least we have the monthly cattle on feed reports. So that's very helpful.
Do the numbers for the poultry and the hogs, which you said flatlined, but do the numbers for the poultry stand for an increase then? If the hogs have flatlined and the cattle inventory is down?
Yeah, and poultry numbers are up slightly, but they're not up enough that I think that we can support USDA's last month's increase of 75 million bushels of corn being fed. I think that was a real head scratcher.
That would have been in old crop. Are your expectations for new crop the same on the head scratching side?
Oh, yes, absolutely. They are, unless we can ramp up poultry production or we have a lot more egg-laying chickens to eat this stuff. We're just not going to increase the hog inventory with prices where they are right now, and we're certainly not in a position to increase cattle numbers on a quick fix.
Dave, what are your considerations on the consumption side?
Yeah, Todd, I think it's worth pointing out on the cattle side. I mean, our inventory numbers are low. These are the lowest front-end fed cattle supplies that we've experienced in a number of years, and they continue to go down, but the carcass weights continue to go up. And dressed carcass weights, give or take, running about 30 pounds above a year ago, and also about 30 pounds above what would be the 5-year, the 10-year historical average. And the resulting side of that we get is that even though we have a lower kill or a lower slaughter rate, we have beef production that's keeping pace with, if not slightly above, year ago levels. And so to me, the durability of the feed demand and then the beef side really isn't in the cattle numbers, it's in the retail demand side. And we saw a big move down in the Dow today, and all of a sudden we've got some worry that the Fed has waited too long to cut rates and that we're going to tip into recession. That to me is really the warning sign, I think, for the beef complex. Maybe a brighter segment to talk about would be, the biggest component that we've got on the corn demand side, which is ethanol, and setting a record production week last week, utilizing 110 million bushels of corn in a week's time, and continues to kind of outperform maybe what we had hoped for. Now, the concerning side is as supply is going up, and we're talking about these record yield numbers resulting in a record supply. The domestic side of the balance sheet simply can't grow quick enough to absorb that. It needs the export component to do that. And we've had good exports, sales and a good outlook on corn. Right now, we're very competitive in the export front. We're probably, $6 to $7 cheaper, on a FOB basis per metric ton than what can be sourced out of South America. We're probably $14 or $15 a metric ton cheaper than what can be sourced out of the Black Sea. The question, I think, still comes back to China, and not only has China not bought many soybeans, they've not really bought a lot of U.S. corn as well, and they're the biggest swing factor in that export market. And I don't want to make this a discussion purely about China, but you can't talk about the export market without talking about the 800-pound gorilla in the room, or the biggest consumer in the room, which is going to be China. So, it's not all gloom and doom on that demand side. I think it's just we need a little bit of an oomph from the export side of the complex to kind of start eating into what are these higher stocks ideas.
Ellen, I'm going to come back to you with a number from Jason Franken. He looked forward into the per capita consumption of beef, which we just heard a little bit about. relatively speaking. 58 pounds per person this year. He expects that to drop to 56.3 pounds next year. Does that sound in line with what you have been thinking about?
Yes, it does. And to further Dave's comment about the carcass weights, hog carcass weights are up about $5 from their 5-year average as well. So it's not just the cattle carcass weights that are up. So this consumption of corn on the last pounds that you're adding to these carcasses, that's tougher to get those pounds without really pushing the corn through them. But I think that Dave's exactly right when he says the consumer is starting to go, wait a second. And I know if you stand at the grocery store and you are at the meat counter and you see people trying to calculate what does a beef roast cost versus a pork roast versus hamburgers versus chicken, they grab the chicken.
Logan, when you go to the grocery store, I'm going to ask you separately because you're in suburbia as opposed in downstate Illinois. Do you notice and take note of what consumers are purchasing, and have you made notice of them trying to buy chicken or poultry, turkey versus other meats, or maybe that they're just on sale?
No, I think that's been evident in my opinion here more recently in the last 3 to 6 months. I do think there has been a shift from the higher, finer cuts of beef to a more chicken-based due to the prices. And obviously up in this neck of the woods, suburbs of Chicago, everything is going to be more inflated across the board than say downstate or out in the country. So I think personally, yes, that's been starting to be factored in on a consumer basis when they're making those decisions at the grocery store.
I'll stay with you for just a second, Logan, because I want to ask you about the topic you were hoping to discuss, how producers should navigate this next 2 months as it relates to old crop and new crop stocks of grain. I assume you were talking mostly about corn, but if you want to talk about soybeans, that's fine as well. What considerations are you and Roach Ag Marketing thinking about?
Yeah, looking back this past week, it's been really disappointing trade for a couple of reasons. And I think that is pricing in a higher yield. I think there's a lot of farmer ownership still on the old crop, and whether that be in commercial storage or on farm and basis contracts. So in combination with that and some sluggish new crop export demand, we've seen the markets fall below key support levels here on the corn. So if you're a producer, what I would kind of plan for here in the very short term is if you can find a move here in the market and some fashion of a rally, and you still have some old crop, or you need to get caught up on some new crop, it might be best to do that sooner than later. I wouldn't really think the best time to be pricing is at the end of this month, because I do think there's a lot of old crop contracts in town or on basis that will be forced to make a decision to either roll or price. So that could be a hedge pressure or burdensome here at the end of this month. So if we can get some fashion of a short covering rally, maybe it's the start of a new month here in the corn and bean market, I think that would be something for producers to consider after we've had a kind of a rough 4 or 5 trading day sessions. So that's what I'm looking for here in the short term is opportunities, whether it be against some of these moving averages on corn and beans that seem to draw selling pressure, whether it's your 10 and 20-day moving average. Rallies up to there, I think, could be short-term opportunities into harvest to get marketing done if you need to.
I'd like to take up the season's average cash price with you just a bit, Dave Chatterton. These coming from both USDA, but the updated supply and demand tables that the farmdoc team posted to their website earlier in the week. They went from $4.50 to $4 for new crop corn, from $11.30 to $10.50 for soybeans. Are those $4 and $10.50 numbers in line with what you're thinking about for new crop?
Well, yeah, Todd, I think you do the math and you look at the stocks to use ratio and you plot that, against where we're at or where we're projecting to be at. We certainly get into those levels. And we know that ag markets and commodity markets in general are what I'll call cyclical, I guess. And we've been talking with our clients about this since early the summer. And I think Dr. Schnitke did a good job of bringing that out in the video and then in the commentary that he put out this week. And really what he's talking about is what have these averages been since the 2006, 2008 kind of ethanol era and where we've been. And we cycle above those and below those, but we tend to revert back to the mean. And we're in a situation right now where if you put up your monthly corn or your monthly bean chart up, when we make these significant highs, it's what happens. When we go back and look at corn, that last significant high came, in that 845 area in August of 2012. And we had a very sharp fall for the next 24 months down to about the 320 level in 2014. Well, our recent top in corn around 827, 830, that was in April of 22. And we're now down, we'll call it, at this 380 to 390 level. And again, it's been about a 25-month process, but you're right back in an area between, I'm going to call it 330 to 430, where you spent the majority of your time from 2014 all the way to early 2020. That was almost a 7-year time period where you were in that, and below the average number that we're talking about here with the U of I numbers. So I think it's a reality check to say, hey, we can't go lower, or my cost of production or my profitability this, the market will, will bear out what it's going to bear out. And unfortunately, we're in a situation where I think we're in a very defensive marketing attitude. And to Logan's point, you have to be, A, willing to accept that, B, willing to market in a way that says, I'm going to take a lot of small victories here where I can, and realize that, we've got selling pressure on top of this market. And until something changes, that's what we're going to be stuck with. And just get on with it if you want to put it in those terms. So, the days of the 2021, 2022 crisis, they're not over forever, but they're certainly over for the foreseeable future. And I think we have to fight the battle that's in front of us here.
Ellen, Dearden, anything to add?
I guess what Dave's saying is we got a bunt. We don't even get a on first base a lot of times, and that it's a hard reality for most people to expect. And I think the other thing is that most guys, let's just say they did sell 15 or 20% ahead of their new crop. I would venture to say that probably is 15% or less because of higher expected yields over much of Illinois and Indiana, at least eastern Iowa. So I think we need to keep that one in mind. We'll have more bushels, but the price is certainly not going to be advantageous.
So change your spreadsheet so that they reflect higher yields.
Higher yields, yep. And even if you're accepting lower prices, higher yields.
Yeah, yes, you have to change both on your spreadsheets.
Right, that's right.
Otherwise, the calculation doesn't look. It looks way better than it probably is going to be. As we wrap up, are there things that we haven't discussed that we maybe should? I know, Dave, that you mentioned China is going to be a big issue going forward. I'll let Ellen pick up on that thought as it relates both to what they've already not purchased, I guess, more than anything for new crop, and what the fall might look like if they don't.
I think we have to expect that they won't be buying a whole lot. They're value buyers, and so maybe we do have prices down low enough that they would consider buying. But I think they're still trying to keep all their options open on where this corn and or soybeans are going to be sourced from. USDA is still talking about 100 million metric tons of soybeans that China needs to import this year. And I venture to say that not many of those are going to be coming from the U.S. That's just the way it is. So I guess my expectation is we'll put in a harvest low. Everybody will be disappointed how low it is, but we probably will see a post-harvest recovery as storage gets filled up or bushels have to be sold over the scales or something along that line. And I think you need to continue to watch deferred futures for selling opportunities, leaving yourself open for someplace flexible to be able to market the corn in particular.
On that note, I'll follow up with you for just a second, Ellen. Because there will be so much grain, both corn and soybeans, if things continue as they are now, the rest of the way out, it could be a long harvest with a lot of grain slugging up the whole of the system. Do producers need to consider other options, other ways to handle their grain? What kinds of things might they think about?
I think given what we've got looking at us right now with good moisture situations, that we have to be looking at a spread out corn harvest at least. I know merchandisers that I talk to west of here are already trying to book trains to be going out of western part of Illinois, barges to be floating down the river. And so they're already putting themselves in a position to be ready to actively move grain late Sep Oct, to, allow some space for farmer storage. Elevators really didn't store corn that much last year. A lot of on-farm storage was used, but the on-farm storage will not be sufficient this year.
I guess kind of touching on a few ideas or briefly brought up, if you're in an area where you are going to have higher yields and you're fortunate to have a pretty good crop coming, I think it's going to be important to look at what can you do with those bushels maybe you didn't account for, yes, at a lower price, but if you do get opportunities, here in the future to market, and maybe that is in the carry, selling the carry in this market, if that presents some opportunities post-harvest, I think that's some ways you can kind of ride out the storm and make better of a situation if you're fortunate enough to have a better crop than maybe you had marketed or planned for with a lower price. As you look at the basis, you might run into some issues here in the short term, with maybe undersold farmer on old crop, but generally speaking, harvest is, widens out there with that crop coming in. Once you get through that, there's ways to utilize your bin space and sell the carry in the market that I think it's going to be important this year. And one other point too is if we can get through a harvest low, I think it would be very important for folks to have a plan for 2025 as well on new crop corn, beans, and wheat. If we still are in an uphill battle with over 2 billion bushel carryout on the corn and working higher, 450 million on the beans, those contracts in next year's crop, I think, are going to be wise to pay attention to and not miss opportunities for that crop as well going forward.
Dave Chatterton, a final word or a follow-up or both from you?
Yeah, I think I'll just kind of echo and maybe pick up on what Logan, the points that he's driving home is, first of all, if you're a producer right now and you're holding old crop or you have new crop that you can't hold, in other words, your yield has gone up or you don't have the bin space, your window is getting very tight. We're going to start harvesting corn in probably about 6 weeks, and in 8 weeks, it's going to be going full-fledged. We are going to have a harvest a little more spread out this year because of the way the planting went. That may soften the basis flow just a little bit, but it's a collision of some old crop and new crop. It looks to me like we've seen some of the old crop whittled down. It's not nearly as significant as it once was, but there are still those stocks that are sitting out there. So the first thing you have to know, I think, is logistically what have I got in the bin? What do I think I'm going to harvest, and what can I hold, and what does that mean my overrun is, for lack of a better word? And on that overrun, I think you better be working on that sooner rather than later, because you don't want to be the last guy trying to go to town and find a spot for this grain. Beyond that, I think there's two things in this kind of a defensive, lower price marketing thing that you have to maybe consider. One is selling the carry, which Logan mentioned, and we do have carry and cash bids right now. And if you've got storage, you certainly want to take advantage of that this year and be able to add, incrementally onto where the prices that you can sell grain at, both avoiding the harvest basis as well as being able to take the carry out of the futures market. But you only are going to capture that carry if you sell it. Meaning you need to have a plan and be able to pull the trigger and sell that Jan, that Feb, that March, June bid, whatever you're looking at some point. It doesn't mean it has to be today, but on these modest rallies, you need to be looking and seeing what you can do on that carry. And the third, I think, was mentioned by Logan as well, and that's 2025 and looking down the road. Typically, we're not earning those carries as we go through, when the March drops off, and May comes down to that where that was trading when the July drop, May drops off, July comes down, et cetera. So you've got to be in a position where you're looking ahead. And we've got probably more 2025 sales on corn here than I can remember at this point for the next year out this year than we have. And I think that's just an acceptance of kind of what we see as maybe a bearish, couple of years ahead of us here, and being willing to bite the bullet at some values that you're not excited about, but certainly that keep you in the game here or keep you, making a little bit of money going down the road. So it's mostly about planning and discipline. When we're in that offensive side of the market and prices are high, it's very easy. You can get a little complacent and get a little bit lazy and still do very well. I don't think we're in that situation. So, I'd urge you to you have to sit down, take the time, look at numbers that you don't like, but at the end of the day, it's going to be to your benefit.
Ellen, Dearden, any final word from you?
I am fearful that corn basis this fall could look pretty poor. I am hearing some feedlot bids at 90 over right now this week in central Nebraska, and yet I can't find people who are willing to give up ownership of old crop corn and move it on that kind of basis. That seems crazy to me. This old crop basis much better than new crop basis. Get her moved.
Logan Kimmel, final word from you.
Just to kind of reiterate everybody's points, all valid points, but I think be on top of the marketing here in the short term and have a plan in place into the winter for next year's crop. I think that's going to be very important in the environment we're in. I think that will make a difference on your balance sheet for this coming crop year.
Commodity Week is a production of Illinois Public Media. It's public radio for the farming world. Find it online. Listen to it on demand anytime you'd like at willag.org. Our thanks go to our panelists this week, including Ellen Dearden, Logan Kimmel, and Dave Chatterton. I'm University of Illinois Extension's Todd Gleason.